As it relates to money, it's always important to know how long you should keep an investment to get the rate of return that you want. And oftentimes, as a loan officer, I get asked, how long should I own a property? And I will tell you that that is a very muddy question because it really depends on the particular circumstance, your tax bracket, and your overall investment strategy. But I want to break that down in today's video because I think it's a really valuable question to ask yourself before embarking on investments in home purchases. Most people ask this question because they don't know what an appropriate time is to live in a property so that you can really get a decent return on investment before you upgrade to your next property. I will tell you that the median stay in a home right now is close to 13 years, I think I looked at last. And a lot of that has to do with the Great Recession and the fact that people couldn't qualify for homes, and then the fact that we've had like really weird real estate years since 2018. And so people are living in their homes longer and longer. But if you look at the internet, it will tell you 5 years. And the reason that it's 5 years is because a home will appreciate anywhere between 3 and 5% in a normal market. If you are gauging 3 to 5% and you want to pay, your realtor fees, your closing cost fees, and still get a decent return, you're going to want to live in the property long enough to really reap the rewards. Now, a quick Google search on this question, how long you should own a house for, and you will see answers anywhere between 2 and 5 years. And I'm going to break that down because I think there's some misconceptions, and the answer to this question really depends on the context of which you're asking it. But for starters, when you're applying for primary residency as an occupancy type for financing, the requirement is that you intend to live in the property for up to 1 year and you sign a deed of trust saying that that is your intention. Now, this isn't hard and fast, and obviously there's life circumstances that maybe force you to move or, inspire you to make a change, and this could be like birth of a new family member, death of a family member, relocation for job. So just know that it's not hard and fast, but it is something, God forbid they audit your file after closing, they'll want to make sure that the intention was real. So I want to give you an example that I think really illustrates why people don't recommend owning a property and selling it after a year or even after 2 years, and why 5 years seems to be the general consensus by most experts. And I think in order to really drive this point home, you have to take a $400,000 purchase price, which I think is pretty consistent with most first-time homebuyer markets across the nation, and a 5% return, which has historically been a really decent rate of return, albeit the last 10 years in real estate has really shown to be more closer to the high single digits, lower double digits. And we've seen pretty aggressive returns in 2020 and 2021 that I don't know that we'll see again. But I would say that real estate has outperformed the 5% for a very long time. So just know that this example is really conservative. But assume you buy a property at $400,000 and the property appreciates at 5%. That would be $20,000 return. Now, most first-time home buyers are going to put anywhere between 3 and 5% down, which is about $14,000 to $20,000. That sounds like 100% return on your money, except that if you sold that property after a year, you would have to pay commissions for the real estate agents, help the buyer, and help list your property. And then you have closing costs, and that is attorney fees, title fees. You have the fees for your mortgage interest, taxes, transfer taxes, any transfer association dues. It can be kind of costly, anywhere between 0.5% to 1.5%. Commissions included with the closing costs, and commissions have been historically 6%. I know that's up for debate now, but that, generally speaking, you would be right around $30,000 of cost to sell that same $400,000 property at $420,000. And so you'd be out $10,000 if you were to buy that property and sell it after 1 year. I just want to caveat that every single market is different. And if you were somebody that purchased in 2020, there was a 30% gain in real estate from 2020 to 2021. So in that case, it would have made a ton of sense. You would have had a great return on investment, but not all markets are like that or that aggressive. So it really pays to talk about what the annual appreciation rate is and has been for the last 5 years, so you can really gauge that on your purchase if you find that you're going to be buying and it may be more short term. So then there's the case to sell after 2 years, and after 2 years the scenario does get a little bit better. You're essentially walking away with right around $7,600 in this case. So you realize your property is worth $420,000 at this. Again, you still have the 6% costs, you still have your closing costs, and then once you deduct all of those expenses, you generally will walk away with like $7,000 to $10,000, depending on what you had to pay or what you paid out in commissions. People would argue that $7,600 to $10,000 isn't a lot of money, and it's not worth the hassle of owning your property, especially because you're responsible for all the maintenance. These are reasons why people advocate hard for owning your property for a long period of time. Now, when you own your house for 5 years, though, the numbers do get a lot more interesting, and I'm gonna put how to calculate the rate of return here in the next screen. But essentially, after 5 years, the property that you bought at $400,000 would be worth $510,512. And when you paid your real estate costs, let's say you paid the full 6%, that would be $30,630. And you had closing costs, let's say you paid, 1.5%, that's $7,657. You're walking out after all of those expenses right around $38,287. And when you minus that from the 510 purchase price to what you bought it for at $400,000, you're really walking away with right around like $72,000, which is pretty significant considering that you would have to be paying rent somewhere or living somewhere. And that does not include your initial down payment. So you get to walk away with whatever you put down. So let's say assume that was 5% at the time, you would be walking away with $92,000, which is a pretty substantial amount to put down on your next property. So this example is relatively conservative given the fact that we know that real estate has had double-digit returns for many, many years. And I think that a return on investment for real estate is actually much larger than this. But this is a pretty strong case for why 5 years. Every market is going to be different, like I said, and there are a lot of markets that have had way more substantial appreciation in real estate and some other markets that haven't really appreciated at all. This is why you have to work with an experienced real estate agent and one that really understands appreciation, because not every zip code is created equal, not every side of town is created equal, not every builder is created equal, and having somebody who knows those micro details about a neighborhood, about a house, about a builder, this is going to make all the difference in your investment strategy. Now, one of the other combo strategies that I see a lot of first-time homebuyers make, because a lot of first-time homebuyers are definitely investors, they just might be starting with their primary residence, and that is house hacking. And so this is where you buy a primary residence and you live in one room and then you rent out the rooms individually. You can typically get a larger rate of return when you're renting out the rooms individually versus renting the house out in its entirety. And when you do that, you can actually live in the property and have your tenants offset the rent, and you might even live for free, and that's what helps you pay down the mortgage. I have many people who do this strategy and then they upgrade their primary residence every 2 years so they can take advantage of the low down payments and the lower interest rates that you get when you are living in your property. And I love it when people do this, because if they continue to use the house hacking strategy, they essentially live for free and they can save larger and larger down payments for future real estate acquisitions. And I've seen like 2 of my favorite clients actually acquire up to 10 different properties this way, and they've built their own real estate investment portfolio, and they're now teaching other investors how to do the same thing. And it's a really great low risk way of starting to invest in real estate. I want to end the video just by saying that real estate definitely has its risks. I have heard many horror stories of people who overcommitted to a property without fully understanding the financial commitment to doing a renovation or a flip, or they fell on hard times and they couldn't sell the property. And so just so you know, you really want to work with professionals and you really want to understand your buy box and have sufficient reserves. But if this is you, if you are prepared, if your budget says it's ready and you're ready to invest, real estate has been an investment in my life that has paid so many dividends, and it's a lot of the reason that I feel so passionate. I've seen many people make millions of dollars off of it. If you guys would like to dig into this topic a little bit further, if you guys want to do a live, I'd love to start doing those again. Let me know in the comments below, and if you found this video to be helpful, don't forget to like, comment, and subscribe, and maybe share it with a friend or family member that could use the valuable information. So thank you guys, your support means the world. Until next time.